You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is time once again for episode 2 here of your bi-weekly options extravaganza, known far and wide as the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we tend to think so around these parts, Options Insider Radio Network. Remember, you guys can get it on pretty much every platform under the sun on demand. If you like what you hear, we just ask that you keep rating and reviewing. We have seen these days it is more important than it was, say, 15 years ago when we kicked off all this madness. And there really was no Apple Podcast, let alone Google Podcasts or Spotify. None of these things even existed. You had to have an RSS reader to get it. But these days, so many new people are discovering options and volatility in the markets all the time. They need a guiding hand. So keep rating and reviewing. It really does help. And of course, if you want to go above and beyond, join us for the great pro Q&As, join us for options oddities, join us for the giveaways and everything else that we do with the live stuff throughout the week and a whole bunch more. TheOptionsInsider.com/secret club. Remember, just me and you talking here. Don't tell anybody else. And of course, however you listen live after the fact, keep sending in those questions, those comments, those insights, those pearls of wisdom. We do love to hear from all of you folks out there. Let's see who we're hearing from on the old program today. First, let's go out to the dark, the stormy, the turbulent shores of Maine, where we are joined once again by the ever gloomy, ever sour Rock Lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com, joined by his alter ego, Volman, once again. Mr. Rock Lobster and Volman, welcome back to the program.
I appreciate being here. It's not a dark and stormy day, actually, although it is what I would call a thaw day as the old man winter starts to lose its grip on coastal Maine. Although we're going to be back to single digit temperatures in a couple days. But other than that, we got a couple of warm reprieve days right now.
Yeah, it's supposed to be like some blizzard just shutting down half the country. Of course, supposed to have a bad one here in Chicago. They've been warning us about it for 2 days now, and yeah, nothing. Wake up this morning, yeah, nothing. So, yeah, one of those kind of things where they're probably planning on shutting schools down. And, I guess we don't have to. So crazy times afoot. Let's go out to the land of St. Charles, where things are never crazy. They're always calm. They're always tranquil. They're always very pleasant. Where we are joined once again by the uncleist of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program to you as well, sir.
Always happy to be here on another exciting Thursday episode.
Another exciting Thursday indeed. So let's get into that excitement. It is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the Trading Block, the portion of the show where we're breaking down what the heck is trading out there. And it seems like mostly red back on the screen. And we're in that yin-yang market. We give, we take, we push, we pull. Today, the bears are pulling us back down. Most of the major indices off a full percent, if not more. Dow a little bit north of 1%. S&P about 1.25%. And the NASDAQ feeling its oats off about 1.75% out there. That means most of the vol we're talking about is still down from our last show, but down a lot less than it was, shall we say, maybe earlier this morning. VIX cash at about a 26.25 when we kicked off the show. That's down not quite 3 points, about 2.75 points. It was down well over 3 handles earlier this week, certainly, and indeed coming into even this morning. VVIX at about a 127 puts it down about 14 points from where it was this time last week. VXX, a product you guys love to see fade, getting a little bit of that fade back now, up to about a 25. That's still down 1.5 points from where it was on Monday's show. And UVXY closing in on a 15.5, was at about a 15.40 when we kicked off the show. That's still down 1.6 points from where it was this time last week. And VolQ, aka the NASDAQ vol out there at about 28.75 when we kicked off the show. It's actually up about 4, almost 5 points from where it was on Monday's show. Looks like a lot of spookage going on out there. Of course, some of it from the earnings front. Also, we're saying the likelihood of a Russian attack on the Ukraine, quote, very high. You know, Russia was saying a few days ago, we took a lot of troops away. Look at this video. And then everyone's like, well, you kind of just move people around and they're all really still there and ready to attack. So, yeah, wasn't really perhaps the mitigating step that a lot of people were hoping for out there. So that's also weighing on the markets today. So a lot to dive into. Let's go around the horn. Since we're talking about geopolitical strife, that stuff can get turbulent, that stuff can get scary. So let's go out to the peaceful shores of St. Charles first. We can always turn to Uncle Mike in times like this for a ray of sunshine, a note of optimism. Mr. Uncle Mike, sir, what is lighting up your tape today?
I think Putin is he's saying April Fools, and it's not April yet. So one day he's like, well, we're not going to do this, and then later maybe he had his fingers crossed behind his back. So
but they made such a cool video, Uncle Mike. How could you not believe the video?
I don't know, but we'll see where it's at. But I think that where we are in the market right now is that that's obviously the fear that's or what I believe is taking down the market today, down a little over 1%. I think just it feels like we're at kind of a sticking point in that if we get so today kind of reminds me of the Trump administration a little bit. Earlier in the week, there was good news, but now there's bad news. And so the market's down again. And so it wouldn't surprise me if maybe over the weekend. So like right now, everyone's just kind of looking and saying, okay, it looks like we're not going to invade Russia. Oh yeah, now we are going to invade Russia today. Then maybe over the weekend, we'll get some type of news saying, oh, we're really not going to invade Russia. So it just kind of feels like Putin's kind of feeling things out with where he wants to go and what he wants to do with this invasion. Or I'm sorry, invade the Ukraine, I think. So I'm correcting what I'm saying. So we're seeing that. But right now, silver does not believe that we're going to invade the Ukraine. It's still in the low 20s. If silver believed we were going to have a Ukraine invasion, I believe it would have had more of a rally. I think VIX doesn't necessarily believe we're going to invade the Ukraine. They think, well, maybe, and by we, Russia invading the Ukraine. I need to get my pronouns straight with that. So we're still in the 20s with the VIX, which is definitely on the higher end historically, no doubt. But I don't know if it's necessarily very fearful of that. The thing that I believe is also keeping the market somewhat calm in this is that it appears, at least as an outsider that's not in the military, it appears that the U.S. is prepared for what could happen if, from a military standpoint, should Russia invade Ukraine. So we do have that's working in our favor. So I think right now, it's just with all the uncertainty that we're having, markets are like, well, let's pull back a little bit today. We're not getting a huge rally in the 10-year. It is up on the day, roughly just under 1/3%. So we are getting a rally, but not a huge one. So there's not a major amount of money going to safety at this point, but it's definitely going over there. And so the other thing that I think is going to be interesting to see is that with a 10-year tinkering around this 2% mark, are we going to just blast right through that if we have some type of bad inflation news, or are we going to go back down to the 1.5% level if we can have to be fearful from the invasion of the Ukraine? I personally like the 10-year at these levels just for that reason, but we'll see where we're going. A lot of things that we're going to have to watch over the weekend, that's for sure.
I was looking for even more rays of sunshine than that, Uncle Mike. But c'est la vie. We'll make do with what we can get out there. Now let's go back to the dark, the stormy, the terrifying shores of Maine. We know when we go to him, listeners, we're all going to be just hiding under our beds in terror. Mr. Rock Lobster, what do you got for us today? What's lighting up your terrifying tape?
Well, you know what? I feel like, TOSAW, he made a lot of good points. This feels like, when you were a kid, what was that? The Ready Bake Oven. The Ready Bake Oven. I guess not when you were kids, maybe, but, there was the Ready Bake Oven where you put in the really yucky cookies and you put it in the little kid oven and you pull it out and you get your cookie, right? Like everything feels like ready baked already. We have the ready baked invasion. We have the ready baked rate rise. We have the ready baked economy slowing down. We have the ready baked I feel like all of this news is now sort of baked into the market. And there would be a time when we would thought like 26 VIX was pretty high. We're like, whoa, we're up there, and it doesn't even feel high. It actually feels, I'm going to say it just feels fair because of all of this stuff that's baked in the market. And some days one thing moves forward and the next moves forward. I think for swing traders and stuff like that, it's a good market. If you like selling out of the money puts and stuff, we're getting to that level again where, hey, a lot of stocks are looking pretty good, or a lot of interesting stocks are looking good. I'm just thinking actually of Square and PayPal, to be honest. They're down quite a bit. I'm starting to look at selling more puts in them, although I was kind of early on my PayPal puts. But that's why I only dip my toe in the water, one toe in the water. I don't throw all my feet in the water at the beginning. So you're seeing interesting pricing, some high premiums. The go back to 4,800 SPX. I don't really see that anytime soon. The Qs are down substantially now. In NVIDIA, which is a bellwether, trading at an incredible multiple. It's still an incredible company like AMD. Like, the future is going that way, and they'll be part of it at least for the next 10 years. But NVIDIA down on pretty good earnings. And, they're like, okay, supply chain. They're saying all the stuff that, freaks people out, which, again, I think there's probably opportunity for some short put action below 200 in NVIDIA, stuff like that. Again, not financial advice for people, but, this is I think this is a day where, and this week in particular with this Putin thing, they'll probably come to a resolution, but they might not. I think the Ukraine has a lot of important Russian interests in it. The fact that they wanted to join NATO, Putin didn't like it because he's got a lot of his pipelines in there and stuff like that. So, he'll think of that as a national security issue. And however he wants to deal with it, he's trying this way because he basically can order his army around and do whatever he wants. So that's definitely an issue. The fact, and the Fed has got to raise, but I think the Fed is late raising, to be honest. They're a year late, probably. When, stocks were going insane last year, that, as the one Fed chairman said, what was it? I forget that guy. He'll come back to me, his name, but the Fed job is to take away the punch bowl. Well, hopefully all of this insane government spending is over. and you probably aren't going to need to raise rates as much as they think they are. And the market has gotten the 10-year up to almost 2%. I have to, every day it changes, so it's hard for me to keep up. So the natural forces are pushing stock prices down, which is good. But all of this stuff on the headlines are just driving, stocks up and down 1-2% a day, 2.5% intraday. So everything actually, I think VIX is fairly priced here. I thought, last week we would see 20. We did for a brief moment in time. And then everything kind of, ballooned because there was no real resolution. So until there's resolution, you're going to see this market gyrate up and down. As far as Volman goes, I think you just trade the swings. VXX goes up, you sell what you got long. VXX goes down, you sell your puts. The recent low for VXX is 19. And that was last Thursday, I think, Thursday or Wednesday. So as a product and as VIX as a product moving around, it's still going to move around, and I think it's all just normal, right? It's normal for the kind of action that we have. So anyway, I think generally when you have higher vol like this, I tend to look at more longer term things I want to own, and just trade the short-term stuff. You buy some puts, market goes down, close them. I mean, it's not because tomorrow the news could be totally different and VIX could be back to 20 because Putin comes to an agreement with the EU and, we're not going to take his oil pipelines away or something. So there's definitely that, there's that kind of thing going on. But you also have to, this is the kind of market where whatever you're seeing today could change on a dime tomorrow. So if you want to look at long-term things or long-term entries into some names that you might be interested in, this is a good time to do that. And you don't have to deal with all the gyration short-term. And if you're trading short-term, you just have to be ready to close the contracts that you own when they make money, because if you blink, it might be different. And that is the way Volman sees it. Let's put it that way.
You do have to be quick on the old trigger finger these days, especially if you're out there in some of these products we're going to talk about in a second, like your UVXYs and even your VIXs and other things like that tend to move around quite a bit in choppy markets like this. Speaking of said products, let's see what's going on out there. Let's start in the major indices. And, VIX actually putting up some numbers, as it is wont to do on a day where the screens are red and vol is green. That's usually a recipe for a little bit more volume. We're back to those levels I was talking about a few months ago, listeners, where we were north of 700,000. We are well north of that now. The ADV, 765,000 again in VIX. That's up well over 300,000 over the past month or so out there. So ever post Omicron, we've seen the vol tick up, and of course the volume in VIX tick up. So we're back up at some pretty lofty levels, and at almost half of that already right now, listeners, exactly 350,000 contracts on the tape in VIX land right now. SPY, similar story, almost half of a day's worth, about exactly 3 million contracts going up in SPY. The ADV out there a little bit more robust. It's closing in on 7.5 million out there right now. The S doing 762,000 contracts. That's pretty much a normal day for the S right now. The ADV holding firm at about 1.8 million. And small caps, at least through the IWM lens, continue to tick up from a volume perspective, at least. The ADV out there is now 1.1 million. So it's blew through 1 million again, and right back up to 1.1. So VIX is at its lofty highs again, and IWM at its lofty highs again from an ADV perspective. The volume in IWM right now, a little bit lighter, only 331,000. But again, the normal ADV out there is half of what we're seeing right now. So that actually would be a pretty active day, all things considered. But not in this new normal, listeners, where volume is coming fast and furious. Let's see if that volume is coming fast and furious in the single names as well. And the answer is surprisingly no. It only cost you a little bit under, actually, 199,000. So not even 200,000 contracts to break into the top 10 today. The bottom of our top 10 today, listeners, is a name the Rock Lobster, which Lobster was just talking about, the one that we don't talk about a lot here on the show. This is PayPal, ticker symbol, of course, PYPL, 106.31, off about 4.25 and nearly 4% on the day. Let's see, they were up to nearly about 111.5 this morning to about a little bit shy of 106.5 now. So turning to the dark side today, good for 199,000 out there. Mr. Rock Lobster talking about writing his puts out there in PayPal land. Number 9, we got our old friend Ford holding firm, probably getting a little bit of love off this their Mach-E, taking the top spot from Consumer Reports over there for electric cars versus the Tesla Model 3. So I rode in the Mach-E. It was all right. I mean, it was fine. But yeah, people liking the Mach-E. That and the Lightning looks like electric is all the rage over there in Ford land, but not the stock today. The stock's off nearly 2%, back down to about 17 2/3. Still good for 208,000 contracts in the number 9 spot on our docket. Number 8 is a name we haven't seen in quite some time in our top 10. This is DoorDash. Good for 219,000. This stock actually bucking the trend. It looks like they obviously had some pretty decent news. Their founder says they busted the post-pandemic myth and they're doing well. So they're up 9% today. You kind of feel for a name like this because how much would they have been up in an actually up market, right? They're kind of getting weighed down a little bit. They were up more this morning. They're up to 115 this morning, and most of that has come off now. They're down to 103 3/4. So giving up all that bloom, it seems like, on the rose out there, which is, again, a shame for for the DoorDash folks. Even though if you go back to, let's say, Wednesday of last week, they were trading about $95. So from that perspective, they still are up quite a bit. But interesting stuff. Always feel for these names that reports into crazy macroeconomic environments because there's always headwinds against them in those types of scenarios. Number 7, our old friend AMC, the Apes. The Apes are back on the list today, listeners. AMC holding out off about half a buck or about 2.3%, right around the 1920 level, listeners. Number 6, our old friend Facebook, the one that none of you pretty much wanted to buy a 10% out of the money call on for this year. I can see why. Days like today, off again, nearly 2%, trading a little bit shy of the 213 handle right now. Good for 338,000 contracts, though, so that's some decent paper. Number 5, our old friend AMD. Again, it's kind of just a perennial stalwart. We never even look it up because it's always in the same spot pretty much every day, somewhere between 3 to 5. Today it is number 5, 457,000 contracts, off nearly $3 or about 2.5%. A little bit shy of the 115 level today. Number 4 is a name we talked about a lot. It's kind of a frequent offender on our top 10, moving into the number 4 spot today. So, things are popping off. They just had earnings, and spoiler alert, they were not great. This is Palantir out there. Good for 485,000 contracts right now. The stock trading 12.25, off 54% over the past year from its high of about $30. But today they're off about $1.60 and change. So off about 11.5% just today. So obviously not a great time for Palantir. This was one of these ones that really seemed like they were kicking in into high gear towards end of Q1 of last year when they had their first announcement around there for earnings. That's when it seemed like they just shifted into a higher gear. And then ever since recently, of course, they've come under some interesting troubles. And clearly the numbers today not looking very good. Number 3. Yes, number 3. When's the last time I said that? Listen, I can't remember the last time I said that. It's Apple. Number 3, a meager 499,000, not even breaking 500,000 contracts for Apple. That is a whole heck of a lot of nothing for Apple. Apple off $2 today, or about a little over 170.5 right now. And good for, again, a bunch of nothing. Number 2, Tesla. Also kind of a whole bunch of nothing. 609,000 contracts on the tape for Tesla. It's off nearly 5%, 4.5%, or 41 handles, 882 right now. Again, talking about losing that top spots in the Consumer Reports rankings. That's probably weighing on it, as well as, of course, the legion of other things that are dragging all the names down today. And then the number 1 spot out there today, listeners, can't remember the last time we talked about this one in such a lofty position in our top 10. It's NVIDIA, the one Mr. Rock Lobster was just drooling over earlier. Says he wants to blast away at them puts on the 200 strike out there. Well, he's getting closer. It's a little bit shy of 245 right now, off about 20 handles, or a little over 7% on the day here for NVIDIA. Of course, you look back over the year for them, and a year ago they were trading about 150. So they're still about 100 handles north of where they were a year ago, but also well off their highs of about 350 back in the heady days of November, right before all this Omicron awakened and really cut the legs out from everybody. So NVIDIA number 1 with a paltry 874,000. That's all we're talking about today. So kind of a light day on the single names, which is interesting. But there are some bright spots or perhaps dark spots out there. And most of those are coming from the earnings front. Hot week this week again. Weber Grill, Avis on Monday. Marriott, Roblox. We talked about them. We had that poor individual who had that iron fly. No, he had an iron condor on in Roblox. Hopefully he took it off because Roblox got annihilated yesterday. They were on Tuesday, as well as Airbnb and Wynn Resorts. Wednesday, Shopify, Crocs, they of the plastic shoe infamy, Hilton, NVIDIA, Marathon Oil, Cisco, DoorDash, Wingstop, Cheesecake Factory, and AMAT on Wednesday. And yesterday, the aforementioned Palantir, Walmart, interesting one, usually a bellwether for what's going on in broad swaths of the economy. Roku, Shake Shack, and Iridium. Remember when Roku used to be a perennial top tenner? Not so much anymore. And then tomorrow we got Draftkings and John Deere. And because we like you folks, hot off the presses from our friends over there at Orats, we have brand spanking new earnings move results, earnings season, and earnings trade reports. I try saying all that 5 times fast, listeners. Let's break down a few of these bad boys. We hit on some of these already from a volume perspective. Let's look at the actual earnings reports now here. NVIDIA, they were after the bell yesterday. They were at 265 going into their announcement. They were pricing in 8.8%. They delivered 7.5%. But again, remember, that's just immediately into the announcement here. If you look at it, actually still off about 7% on the day. But yeah, pretty much actually about exactly the level they were when they ran this report. They were 245.30 as of this report. They're 245 right now. So yeah, about a little over 7.5%. So kind of still closing in on their straddle. Not quite the blowing the doors off. Palantir, they were at about $14 as of this report. They were pricing in about almost 15%. So they actually underperformed their straddle because they're only off about 11.8% as of this report. So 12.32. So underperforming. They priced in a lot of juice. We were talking about that earlier this week. It seemed like a heck of a lot of juice for Palantir, and so far at least doesn't seem like it's merited. Cisco, they were yesterday after the bell as well. 54.25 is where they were trading. They're pricing in almost 5.5%. They delivered about a little bit less than 3.9%. So underperforming there as well. Cheesecake, almost $41 is where they were trading going into their announcement. They're pricing in 6.6%. They delivered a whopping 4.1. So a lot of underperforming here so far, listeners. Walmart, they were pricing in 4.1%. They were trading at 133.5 going into their announcement, and they ended up delivering 2.3%. So underperforming there as well. Let's see if that's still the case out there in Walmart right now. They have kind of rallied a little bit since then. They're up almost 139. So with that rally, they've rallied over $2 from that 136.63 level. So they are pretty much getting a little bit in line, if not exceeding their straddle a little bit. Applied Materials, let's see. They were at about 141. They were yesterday after the bell. They were pricing in 6%, and they moved 2.3%. So interesting stuff there. Let's see what else we've got on the docket here. Again, you can check out all these move results just in the last 24 hours. We've had a lot of names popping off, listeners. So you can check out. There are legions of these here for you guys to sink your teeth into. On the season front, this week was shaping up pretty robust. It's kind of dialing it back a little bit now. We're at about 101% right now. It's just a little bit north of break even. So that puts us at week 1, 105%, week 2, 72%, week 3, 106%, week 4, 107%, and week 5 so far, 101%. So far, averaging out at 97%. So close to a break even so far, and also almost 10 points above our average of 88% out there. In terms of earnings trades, a whole bunch of new ones going up. We've got ATUS, got Palantir there as well. Another Palantir buying a calendar and selling a straddle, both going up in Palantir today. In Walmart, looks like they bought a new calendar out there as well. BAXAN, Fiverr, you name it, a whole bunch of names. Buying straddles, selling straddles, buying calendars. I don't see any short calendars yet. That's the one trade they haven't entered into this season, but they have in the past. Again, that's a bit of a esoteric trade. Not many people do that, but intriguing stuff. If you want to see what they're up to, what are the strikes, what are the entry points, what they're looking at for exit points, check out the earnings trades reports as well. Let's look ahead really quickly to some names that are popping off. Even today after the bell, we got Roku after the bell. 161.5 is where the stock was. They were pricing in 23.37 in the past. They've moved 20.25. So a little over $3 worth of extra juice. Is it merited? Today's markets would maybe say no, but we shall see. Shake Shack today after the bell, 78, almost $79 was where they were trading. They were pricing in 760 in the past. They've moved 670. So 90 cents worth of extra juice. Is that merited? We shall see out there. Let's go to DraftKings. They are tomorrow before the bell. They're trading right about $23. They were pricing in $2.69. In the past, they moved to $1.41. So that's a fair amount. That's almost double what they have moved in the past. That's a lot of juice. Again, a lot of action on that online betting front. So it could be argued that it's merited. But if past is prologue so far this season, it could be a little bit of a bridge too far as well. Again, check all this stuff out for yourselves, listeners. TheOptionsInsider.com. 4 brand spanking new reports for you guys to sink your teeth into. Meanwhile, we've got to keep rolling. It is time to unleash the Eye of Sauron. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
Everybody, let's see what we got on the docket today. What is our old pal, the Eye of Sauron, returning to us here with? Actually, returning is an apt metaphor because we are returning to something we just profiled, I believe was on our last show. Very near-term paper we're talking about here, listeners. We're going back out to everyone's favorite name, Thor Industries. If you're a big fan of Norse mythology or perhaps the recent Marvel Cinematic Universe, you may be a big fan of this name as well. Ticker symbol THO, T-H-O. Trading right now, $94 and about a quarter. So keep that in mind, listeners. And over the course of the past year, they've had a little bit of an interesting run. A year ago, they were at 120.5. They topped out for the year at 152 and a quarter. That was on March 17th, and they've kind of been trending mostly lower ever since to where they are right now, 94 and a quarter. So off about almost 22% on the year, and off obviously a lot more from their highs on the year. Someone came in on Monday's show, and we thought they got a little aggressive. Not so much with the strike. The strike was still about 10 handles out of the money, but with the time frame, they were blasting away on the 85 puts that were going out this week. This was a pretty much pure weekly play out there. Someone came in and blasted away at the Feb 85 puts, so roughly 10 handles out of the money at the time, at least. They sold them through the bid. The bid was 25 cents. They said in order to get 5,000 done, you got to go through the bid. They were 25-cent bid. They sold them for 20 cents. That's still a 72 vol, listeners. And the stock was, again, right about $95 when these went up. There are no earnings this week. There's nothing along those lines. It just seems like kind of an old school, very naked premium harvest out there, trying to get 20 cents 5,000 times. And as I mentioned, Mr. Rock Lobster, coming into today's show, the stock has dropped, but only about 70 cents. It was 94.92 on that show, about 94.22 right now. So not enough to really threaten the 85 strike. Let's just look really quickly. Maybe intra-week, it got a little lower to make things a little bit spookier. And no, this is about $94 is about the low that it got to on this week. So they never really had to sweat. It didn't drop to like 86 and then rally or anything along those lines. So no sweat in here. These puts are looking pretty good, listeners. They're about to go the way of the dodo. No surprise that they are still opens. Mr. Rock Lobster, we got someone out there looking to pocket about $100,000 when the week comes to a close, unless the things turn really dark in Thor Industries, sir. What say you? Kind of an aggressive, near-dated premium harvest, sir.
Yeah. Now, I heard a little birdie told me about Sebastian didn't like my indicator.
He crapped all over it on the last show. Yes, so you need to defend yourself, sir. First off, he had no idea what I was talking about, which is how does he not know about this? And then B, he thought it was idiotic.
Of course, how is it idiotic? You're a big wheel and you just whack some puts out and you make money to buy. I just find that every time it's about the same amount. That's, Hey,
I'm just the messenger here. You go beat up on your work wife there, not me, sir.
I am going to have to take him to task on that tomorrow. But anyway, I crack myself up sometimes.
You do.
This one is actually the surprise was that there was a 20-cent bid for those puts.
Yeah, those are pretty decent bid. Well, I got to tip my hat to that. You know what that reminds me of? That reminds me of back in my days in the SPX. You're standing there, nothing's happening. It's a quiet day. And then there were all these crazy nut jobs in the back of the pit who never said anything except for when a crappy put got a bid in the book, right? And then all of a sudden, they would lose their minds. And before you even saw it, it pops up on the screen. And they're like, sold 400 puts for a penny, whatever the hell it was, whatever nonsense it was. This rings to me of that. Someone saw this lion in there like, oh, my God, I can get these for 20 cents, done. And they're just picking up those nickels in front of the steamroller, sir.
Yeah, that's what this feels like. So I'm going to assume that they're right. And the person that wanted to buy them didn't. I mean, I think this is just a bag of confusion for me. Why somebody wants, unless they know something, right? Because this isn't a stock. This isn't a stock that lends itself just to falling $10 out of bed for no particular reason. They make RVs, and I'll bet you they're selling a ton of them right now. To be honest, I like this. This is one of those kind of rock solid American style, type companies. They just make tons of money. And of course, everybody wants a recreational vehicle because why? You don't have to deal with anything. There's no, you just get on the open road and you don't have to deal. So probably a good year for recreational vehicles.
Everyone wants to drive around with their own bathroom. That's really what it comes down to.
Exactly. They don't have to deal with, you don't have to put a mask on when you go in your own vehicle. So, But unless there was a huge surprise out of here, midnight. I mean, when was the last time the stock was below $90? Let's take a look. Stock hasn't been below $90 once only. We had a little bit of that scare at the end of January. Traded about 86. So, I looks like they're trying to scoop the. They're trying to get in on a fairly cheap price here. So again, who bid 20 cents? Who knows? But the seller look like they're going to be right, at least as of right now.
Can't quite get the significant other of Ferrari, but a decent Tesla or maybe a used Ferrari you could probably get for a Porsche. You can get a used Porsche at that level for $100,000. There are a lot of things you could do with $100,000 out there. And that's what our friend looks like he's going to come away with, listeners. You like these? Did you piggyback on these? I don't think that bid was around for long, but intriguing stuff nonetheless. Let's go out to Mr. Rocklops. This is a name you and I have chatted about very recently, actually, on Options Oddities. This is Cinemark, ticker symbol CNK, trading right now a little bit shy of the 18 handle, $17.99, off about a quarter, about 1.5%. This is the name over the course of the past year has had its travails. Of course, it got caught up in some of that lofty AMC love early on last year, and then rallied up to its high for the year of about 26.12. It never got caught in that obscene where, tripled and quadrupled, nothing along those lines, but it had a nice run, got up to 26.12 and hung out there for longer you might expect, hung out there till around late June in the mid to low 20s, and then it started selling off. Then it tried to rally again second half of the year, right around November, 22 and change. And then it kind of gave it up again to recently 14.34. Then that was on January 28th. And it looks like over the last 3 weeks or so, it's actually had a nice pop from 14.34 all the way up to about 18.25. And of course, today a little bit shy of the 18 handle, giving some of that back off. Now, as you recall, Mr. Rock Lobster, and our listeners who don't listen to Oddities won't know this, so I'll give you a quick recap. But we talked recently on just last week's show about how someone blew a ton of money buying the Jan 12.5 puts. They came in and scooped these things up on December 17th. So this is kind of in like the second or third inning of the fear over Omicron. The stock was still 16.5. So stock needed to sell off $4. These were pretty apocalyptic puts, and they only had like a month for these things to work out. It was about a 92 vol. We didn't like these at the time. And sure enough, the stock closed at $16, and all that money was wasted. They wasted close to $250,000, actually over $300,000 if you add in all the paper that they did on the day. So people have been panicking and scooping up puts in here for a little while in Cinemark, and that appears to be what we have going on today. Again, Mr. Rock Lobster, but this time not even getting a month. These people are giving themselves a day because someone came in this morning and scooped up 9,498 of the Feb 17.5 puts. Now, these are about half a buck away, so they have a chance. They paid 15 cents. They lifted the offer. They weren't playing. They didn't say, let's work a dime bid and see if we get filled. They said, nope, we're paying a 120 vol for these bad boys. They are going the way of the dodo tomorrow. Now, that was with the stock about half a buck higher. That was 18.5. So the stock has moved in their direction. Are these things 15-cent bid yet? I don't think so, but maybe we shall see. They're maintaining a better level than if their stock had stayed at 18.5. Again, these things are nothing but decay at this point. So interesting to see. And then they came back. They liked it so much they did 10,000 more. A total of 20,000 of these Feb 17 half puts going up for 15 cents today. That's not enough. They also gave themselves a little bit more time. Maybe they decided, I don't know if one day is enough. Let's buy 10,000 of the Marches as well. They paid $1.10 for those. So those are a little bit beefier. But Mr. Rock Lobster, we can just drill in now. This is like the second or third tilt at the windmill we've seen for someone out there who's just really, really excited about spending a lot of money on very near-term puts in Cinemark. And so far, Mr. Rock Lobster, it has not worked out. This guy's got 1 day and counting, sir, to make this trade pay off.
Well, this particular, they're still at 15 cents. So
there we go.
If you want them, they're still there. And so, yeah, I guess they're looking for some kind of fall apart. But I think Cinemark is benefiting from the reopening, lifting of restrictions, blah, 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 blah. If you look at the stock in the last couple of weeks, it's like one of the few stocks that's just straight up. So I think that reopening narrative, from the beginning of the month, it is pretty much straight up from a low of 13.5 to 14. So I think it got kind of smeared on that late Omicron thing. And now it's with, different states lifting restrictions, all that kind of. Anyway, so what I call the reopen trade, the reopen trade, as we go maybe move into post-pandemic. So I think this is a bellwether for that type of activity, seeing as how people freaked out people don't go to the movies, but unfreaked out people do. And there you go.
Well, someone is still freaked out about this name because they keep buying these freaking puts.
Yeah. Well,
I think it's going away tomorrow. It's gone tomorrow, baby. So, yeah, this is aggressive. We shall keep an eye on this. We'll be able to pay these off on Monday, at least a good chunk of them, listeners. The March, obviously, a little bit longer term. But, yeah, this is like the third tilt of the windmill for these people out here. It's just really freaking out about Cinemark. And so far, at least, not come to pass. And they've wasted a fair amount of money so far. We'll see if this cash now is going to join that club out there. They like throwing away $300,000 at a clip on puts in this name. So we shall see if that continues. Let's go out now. This is a newcomer to the odd block. This is everyone's favorite name, the Owl, a.k.a. Blue Owl Capital, ticker symbol OWL, OWL. This is, I'm not sure what type of capital this is, if this is a REIT or what these things are, but Blue Owl Capital trading right now $12.30 out there. A year ago, they were trading $10.50. They kind of sat there right around $10 for pretty much the first half of the year until late May. Then they had a nice pop. They got up to $16.30, and then they kind of sold off again very quickly down to $12 in June 18th. Then they rallied again. By November 2nd, they got up to nearly $18. Actually, about $18 was their high for the year. Then they turned right back around and gave pretty much all of that back. By January 27th of this year, they're back down to $11.73. So they were not that far removed from where they started the year. Then the last couple of weeks, pretty much right late January, same day, 27th is the other name. Until now, they've had a bit of a rally, got back up to 13.25. But then giving it back again today, back to 12.34 out there. So this name has been kind of topsy-turvy over the past couple of months out there, off another 7.25% today. What do we find out there in this newcomer? What's going on in the Owl? It was the March 12.5, so pretty much at the money calls. They had earnings, I should say, by the way, this morning before the bell, listeners. And given the move, I'm thinking the results weren't super favorable. But then again, we're in a weird macro environment, so that could be pulling this name down as well. March 12.5's going up 5,001 times this morning, listeners. Lifting the offer for 70 cents. Again, not playing around. That's a 65 vol. They said, how are these? Where are these now? Okay, we'll take them 5,000 times. The stock was pretty much right here at $12.50 when they went up here. Actually, a little bit higher, 12.50. It's about 20 cents higher than it is right now. And let's see, they had earnings before the bell. And Mr. Rock Lobster. This seems like an interesting play. This name has been moving around quite a bit out there. Even in the last few months, it's kind of had an interesting rally and then sell off and then now rally again. So I suppose it could be poised for another aggressive move. And these are at the money calls. So at least he's not buying, let's say, the 20s and they expire tomorrow. That's the kind of paper we've seen a lot of over the past year. This, I guess, by way of comparison, is, I'm not going to call it reasonable, but at least not as insane, sir.
Not as insane. Let's break that. Is it not? Okay. So we're looking at least they're buying a little duration. So let's see, how much are they paying? Wow, this is really, stock just doesn't trade very much, does it? Although it doesn't pass the day one test. On day one, they're already out money.
Yeah, they're not looking good right now.
Then again, it's hard to buy a call today unless you bought it maybe in VIX or VXX. That's not up money. Oh, there are some names that are actually up today, here and there. But I look at this and I'm like, well, I don't think this is a terrible purchase. I don't know anything about this company at all. It did have a 17 high recently. So again, this is like not a terrible purchase. They actually have revenue, stuff like that. Asset management firm, blah, 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 blah. Huh. Okay. I don't know why they're getting kind of smacked so hard, but I'm not quite sure. Alternative asset management. I don't know. It feels almost like would I say like takeover? I think somebody's just scooping the fact that, the earnings were okay, but now they're kind of hitting the stock. So again, a weird one. It just feels like you're paying up for the stock. That's all I'm saying here. It feels like anyway.
Yeah, it has that feel to it. And you're right. It is looking against them. This is a global alternative asset manager that deploys private capital across direct lending and real estate strategies on behalf of institutional and private wealth clients. So there you go. That's exactly what they do. We'll keep an eye on these. Again, I don't love them, but compared to some of the other call buying we've seen, not the worst. Let's see if your email is the worst. Spoiler alert, it's never the worst. But it's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. We got to listen to the live chat saying there are also 10,000 on the March 17 half puts going up in Cinemark. Yes, I mentioned those. That was the one differentiating factor to the other paper we've seen a lot going up in Cinemark of late, which was it wasn't all just one near dated trade. It was a little bit going out a little bit farther out there as well. But there are a ton, 20,000 going up today as well, which is weird. And again, no rolling, anything like that. It was opening on the Febs. So usually you see 2x1, you think, well, they kind of lost money. It's a losing roll. But that's not the case. It doesn't appear to be the case, at least here in Cinemark. It seems like it's new paper across the board. But let's get out some new mail, some new questions, new comments. You guys are voting on our new-ish question of the week. We asked you at the beginning of the week, according to the old Super Bowl indicator, a lower score in the Super Bowl. We had a 43-point score this year. That foreshadows a weaker year in the S&P 500. So are you guys buying that indicator? Quite simply, how are you positioning in your broad S&P portfolio right now? We gave you 4 choices. You're still long to straight up long SPX or SPY, or you're long maybe SPY calls or a little bit of stock substitution, or you're long SPY, but you got to put in the back pocket for a rainy day, or you've got some other going on. And right now, looks like 45.5% of you are saying you're long SPY with the puts. So I can't fault you. These are dubious times. It is nice to be able to sleep at night. So that put, even though it is pricey, can give you that bit of protection. Number 2, we've got long SPY calls or stock substitution with almost 23%. We got 13% saying you're still just straight long SPY. So that's actually our loser because 18% said other. But again, we need more people writing in to say what your other is. What is your other? You got iron flies on in SPY? Hit us up. Let us know out there. Last week, we had the question, Which one do you want to buy a 10% out of the money call on? Peloton, Facebook, Hood, or SPY? Expiring at the end of the year, obviously, and you guys chose SPY or SPX. Overwhelmingly, 42% of you, followed by 30% for Facebook, 15% for Peloton, and about 13% for Robinhood. So interesting stuff. All right, let's go out to your questions. I like this handle. He gets one of our Handle of the Week awards as well. This is Captain Britain. Captain Britain. Sounds very proper. He says, hello from across the pond. Well, hello, Captain Britain. He says, is there such a thing as too much hedging? Also, is there a right and wrong time to hedge your positions using options? Well, a lot to unpack in a seemingly simple and deceptive question. Uncle Mike, you've done a lot of strategery over the years on this exact topic, when to buy puts, how to buy puts. Let's start off with this first question, Uncle Mike. Is there such a thing as too much hedging? And then we can go from there, sir.
Yeah, there is a such thing as too much hedging. The story I like to tell is I was a young trader and I was trading a futures contract. I'm like, oh, I need to prepare for this. So I added some deltas. Oh, wait, I need to prepare for this. So I hedged it with taking away some deltas, but add some theta. And then I spent like 20 minutes trying to come up with every possible solution to hedge myself. And then I'm like, you know what? I feel really good about this trade. I think I'm prepared for every possible thing that can happen. And then I went and looked at my account, net delta 0, or position delta 0, position gamma 0, position theta 0. Everything had neutralized itself so much that after like 12 trades that I created essentially cash. So no matter what you do, no one's ever made any money ever without taking some type of risk. And so what hedging is all about is to determine what risk you want to take away, what risk you want to trade. If you're concerned with a sideways market, sell premium against it. If you're concerned with a down market, then maybe buy some puts. And what you're doing is, if you're concerned with a sideways market, you're giving up some upside, but you're going to profit if it is a sideways market. If you're concerned with a major downturn, then you buy a put, you're paying some money for it, you're giving that up, but you're protected from a major downturn. That's what hedging is about, is that what concerns you the most. And so in terms of when is there a better time to hedge, I think it's just, you need to look at this with your overall portfolio, in that I view hedged equity as an asset class, in that if you're looking to hedge yourself, I think that you need to have some part of your overall portfolio that's not hedged, some part of your portfolio that's in bonds, some part of your portfolio in commodities, and some part of your portfolio in hedged equity. Because if the market does go down, you have some type of a hedge in place, whatever's best for you, but you still have the ability to make some upside. You'll underperform the non-hedged equity, of course, but you need to view it as one asset class. And if that's a major asset class for you based on your risk tolerance, that's fine. But if it's more of a minor risk or asset class, or no asset class at all, if you're 22 and you don't really want to hedge, then that's fine too. So I don't know if there's necessarily a right time or place to it. I think there is a right size to it based upon what your risk tolerance actually is.
Well said, sir. Anything to add there, Mr. Rock Lobster, for our favorite handle here, Captain Britain?
Yes, I would say one thing with hedging is you have to do it when you don't need it. So if you try to hedge something when after the ship has sailed, they're probably not going to do you any good. Probably better just to close the position. And then two, I like how Mike says that, you kind of use the hedge to decide what risk you want. So what I just tell my students is you have to love the Greek you have. So what I try to do is focus on the dominant Greek that will make me money, and try to minimize the Greeks that or where you think the Greeks in your Greek risk has the most risk, I try to minimize where I think is the most risk. And then I try to optimize the risk that I want. And you can do that by the way you structure the position. So that's, I'm just basically re-saying what Mike said, but it's certainly something you got to pick the risk you want, and you have to make sure that that's the one that's going to pay you if what happens is if you think what is going to come to pass actually comes to pass. So that's the easiest way I can think. You got to love the Greek you have, delta, gamma, vega, or theta. And you got to do it.
What about rho? Come on!
You won't even do the webinar.
You don't need it.
You won't even do the webinar.
You don't need it.
What's the old saying? If you can't be with the Greek you love, then love the Greek you're with, right? That's what they all say.
There you go.
You came to the party maybe for Delta. You end up with Rho. You're like, I guess I got to love Rho. Why not? Love the Greek you're with. I like that. As we keep on rolling into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, Mr. Uncle Mike, we still have uncertainty weighing on the markets out there today. Folks are spooked. There's red on the screen. What are you keeping an eye on, sir? Actually, by the way, long holiday weekend, listeners, President's Day on Monday, so no option block on Monday. So we won't be here to walk you back off the ledge. So bear that in mind. So, Mr. Uncle Mike, what are you keeping an eye on for an entire week until we can gather here together on Thursday?
Oh, man, I don't know what we're going to be doing with no option block for a week. I'm going to keep an eye on all of the events that happen over the next 167 hours because there's going to be a lot of them, and I'm predicting that we're going to have a lot to talk about come Thursday with everything that's going to be happening between now and then. I'm watching a lot of things. We have the 10-year note right at the 2% level or around that area, seeing if we can bounce one, either break through that or bounce the other way, whatever the case may be. Commodities have been relatively quiet with the exception of oil these last few weeks based on a lot of the things that's been happening. If we do have a Russian invasion of Ukraine, I'm going to be watching where the VIX goes. And then, of course, we are at a key number right now in the SPX. We're approaching the 4,400 mark. In the S&P mini, we went down to 4401 today. So 4,400 is holding for now, but we'll see if it can continue to hold. So I am watching a lot of things, and we're going to be talking about a lot of things on Thursday. That's one thing that I feel very confident of.
Yes, it should be an interesting Thursday. Mr. Rock Lobster, same question for you. What are you keeping an eye on all the way through till next Thursday, sir?
Resolution of this Ukraine thing. Is it going to be resolved? Is the Fed going to wait till the 16th? All these questions, So I would guess it would be resolved in a week, or it's not. And so I think that everything else is kind of secondary to what's going on. So this is causing market consternation. I think that's the deal. We got no way to get around it until it's over with.
Unfortunately, the show is over with, listeners. But before we go, let's go back around the horn. Let's start with the rockingest of lobsters. If folks want to hit you up in between episodes of this fine program, Mr. Rock Lobster, where should they go? What should they do?
Yes. Go to optionbit.com. You can try all of our products on learning how to trade ideas. If you want to learn about those Greeks and you have no idea, well, we could teach you all you need to know. So come on over to optionbit.com, memberships, or call Ted 888-TRADE-01. If you say you heard about it on this show, he will give you 10% off any option product that we have just because you listen to the option block.
There you go.
It's something for nothing.
Something for nothing. Call Ted. Optionpit.com is the place to go to begin your journey. And Uncle Mike, if folks are lamenting the fact that this show is not on Monday, they don't get their dose of Uncle Mike, there's other places that they can go. Where should they go, sir?
Oh, there's a lot of places. So let's start off with Twitter. Feel free to follow me on Twitter. One of my New Year's resolutions that I've been doing a decent job following this year is to tweet more this year in 2022. At Mike TOSAW, TOSAW. You can follow me on Twitter. Also, I just put up another video on YouTube, and I'm planning on putting up another one today or tomorrow. Feel free to check out my YouTube channel, St. Charles Wealth Management. You type it in, you'll see a bunch of videos, and the goal for the year is to have 50 up by the end of 2022, and I'm still on pace for that. And then if you're looking for a financial advisor, that would be me, that delves in the option product, assuming it's appropriate for you as a client, which, well, I think it is for almost all my clients. Feel free to check out my website, stcharleswealth.com. Be more than happy to have a conversation with anybody. And that's where you can find me.
stcharleswealth.com. Give him a follow on the old Twitters at Mike TOSAW, Give him a follow, the old Rock Lobster as well, at Option Vol, all one word. We got to get on out of here, but don't worry, we'll be back in exactly 27 minutes with Twifo. I do believe I will be joined by the once and future Dr. Vix to hold court over all the spectrum of volatility across all the trading products over there. Of course, the equities, but also maybe some energy, some metals, some ag, some rates. You never know what the heck's going to make it onto the show. That's why you got to tune into Twifo every week. You should keep an eye on us and CME Group in between as well, because of right before showtime, they will tweet out the movers and shakers report. So that will give you a hint of what is moving and shaking, what the heck we're going to be talking about on the show that week. Then, of course, like I mentioned, no show on Monday, listeners. So we'll see you back here, of course, tomorrow for Volatility Views, noon Central, 1 p.m. Eastern, Options Oddities after that, 2 p.m. Central, 3 p.m. Eastern. Then a nice hiatus on Monday and all the way back to next Thursday, another episode of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.